a great time to be here to be discussing these issues.
Sure.
I mean, firstly, your reaction to what Trump said about, that the Fed is crazy to keep raising rates. Is there truth in what he's saying?
Well, obviously there are different people at the Fed who have different points of view. Some want to move faster, some want to move slower, and some think they're on exactly the right pace. I think it's very important that the president, although he's expressing his opinion, has very clearly said, I've appointed good people, and I think they should be making their decisions. I'm expressing my opinion. So some other presidents have not been so separate in that. They'll express their opinion and then put direct pressure on the institution. Here he's expressing his opinion, but he's making it very clear that he said, I think they should be making their decisions.
How is he not meddling? How is he leaving the Fed to be independent when he's making all these comments?
Well, he's been making comments about low interest rates for a very long time. When he was considering Janet Yellen as a potential Fed chair more than a year ago, he said, I like Janet Yellen, I respect her, she's a low interest rate person, I'm a low interest rate person. So he had said that for a while. This is really nothing new.
Is there any truth in holding the Fed responsible for the sell-off that we saw overnight? Are investors suddenly waking up to the idea that, you know what, maybe this is a rising rate environment, maybe EMs are really struggling to cope?
Well, I don't think the Fed surprised anyone. They've been telegraphing their rate path very, very clearly, that it's a gradual one. There was no new information that came out about the Fed. I mean, if the markets just suddenly got it, that's, I think, the market's issue. The Fed has been very clear. I don't think it's only that. We've seen a lot of movement, especially in tech stocks, and I think there's been a lot of excitement about particular sectors, and there was a general pullback.
The Fed has also been clear that it's only looking at the U.S. economy, but there have been rising or, louder voices from outside the U.S. asking for the Fed to be mindful of its actions. Case in point, Indonesia, the finance minister saying,
Sure.
You know what, there are implications for the rest of us. Should the Fed consider the outside world? It is an interdependent world.
Of course, and the Fed has an outsized influence on the world, and it does in the sense that it considers how its impact on the rest of the world then affects the U.S. But the U.S. Fed, like every central bank, is created by its domestic politics and the domestic Congress, and so the focus has to be primarily on domestic issues. But during the financial crisis, for example, there's a lot of coordination among central banks. Actually, at these meetings back in 2008, when I was there was a lot of coordination. We did coordinated rate cuts and such. So there can be cooperation, but always the primary focus has to be on the domestic issues for all central banks.
Can there be greater coordination this time around with this Fed? Do you see that happening?
Well, I don't see that we're facing a global crisis as we did in 2008. So in those extreme circumstances, central banks can work together. They did dollar swaps with a number of central banks. And so in those circumstances, they can. I think right now we're pretty far from that.
What's tricky really is the divergence. The Fed is moving way faster in its normalization versus the rest of the world. How do you see this divergence playing out?
Well, part of that is because the fundamentals of the U.S. economy have been stronger. So the U.S. is now having a growth rate of 4%. Last year, there was strong growth in most of the parts of the world, but now we're seeing China slowing significantly. We're seeing Europe slowing significantly, a lot of slowness in emerging markets. So I think it's more the characteristics of the divergence of the fundamentals that the Fed policy is reflecting, rather than the Fed policy driving the fundamental differences. Because, of course, if the Fed had rates that were far too high, we wouldn't be growing at 4% in the U.S.
And give us a sense of how strong the U.S. economy is, because, of course, there are varying views as well.
Sure. So I think right now the U.S. economy seems pretty strong. Now, obviously, there could be headwinds that come in from leverage, from changes in financial market conditions, from changes in the rest of the world. But we see investment picking up. We see consumption continuing to be strong. And so the U.S. economy seems to be doing reasonably well.
A bit confusing, because Powell says that we're far from neutral, and we have others saying that we are at or close to neutral. Does neutral even matter? Where are we?
Well, as economists like to say, the standard errors are wide. So some people can say we're close, some people can say we're far. It's very difficult to know exactly where neutral is, especially after we've had such tumult over the last few years. And this is not sort of business as usual. When we had kind of a steady growth and steady ups and downs before the financial crisis, it was sort of easier to get a rough feeling for where neutral was. Now I think it's a less useful concept.
So it does open up the discussion of perhaps I guess the Fed mispricing risk, or the Fed adopting a wrong approach to rate rises?
For sure. I mean, it's very difficult to know, and I think Jay Powell has actually been very clear about that. I think he gave a good speech at Jackson Hole about saying not so clear exactly where this neutral is, and I think he's been very straightforward in saying it's hard to estimate these things. So after the fact, everyone's going to say, they got it all wrong, but it's very hard to know now. I mean, I think completely objective people have different views of where it is because we're not quite sure. It's tough. It's really an art rather than a science of central banking.
But do you see any signs at all that the U.S. economy can't cope with further rate rises?
Well, right now it seems that it's, obviously the tremors in the market today may be related to concerns about the future path. But so far, consumption, investment being reasonably strong, asset prices being reasonably robust. We'll have to see if things start to move. But I mean, the 10-year rate has only moved into the area of like 320 or 3.25. That's not really high. So I don't think we've had this sharp rise, sudden sharp rise in rates. It's up about 1/4 percentage point or 30 basis points. But if you look in the broader scheme of things, that's not especially high rates.
U.S. interest rates is one issue. The other issue is, of course, the prolonged U.S.-China trade spat.
Yes.
Do you see an end to this trade spat, and what kind of implications do you see?
I don't see an end to it. I think this is going to be an ongoing tension between the U.S. and China. I think it's going to be very difficult for the Chinese to respond in a way that will satisfy what the Trump administration wants. Like, the Trump administration can be satisfied in certain circumstances, as we saw with Canada, Mexico, South Korea. But I think the disputes are much more fundamental about enforcement of property rights and really sort of geopolitical power that I think is bigger than just specifics on trade.
We know that Mnuchin has met with the PBOC, and the issue at hand is, of course, I guess the interpretation of the weakness of the yuan, whether that's been deliberate movement on the part of the Chinese. What's your own take? Does the U.S. have reason to think that it is a competitive devaluation of the currency?
So I don't think the Chinese are purposely trying to do that, but they are following policies that are going to lead to downward pressure on the yuan. Because of the Chinese economy slowing, the central bank has been easing, so opposite of what the Fed has been doing and others. And so when your central bank is easing fairly significantly, that tends to put downward pressure on your exchange rate. So they've had to intervene to try to keep the exchange rate from falling further. And I think it's a challenge because the Chinese economy is clearly slowing.